What's up, traders? This is Cole from the Free Trading Academy. For YouTube course, we are talking about how to make $1,000 a day in the Forex market. We are covering basically every facet of this market: entries, supply and demand, institutional levels. Today's video is a continuation in what we've been talking about in terms of just overall playing defense against the big boys in the market. So we are retail traders, as I said in my previous video. Many of us are not billion-dollar hedge fund traders, so we do not have the capital, which equals the power to move the markets in the way that we would like. Okay, we trade as the market trends, and the big boys set those trends. So we're talking how to trade stop hunts today. So your stop hunts, your fake outs, liquidity grabs, I mean, they're all market manipulation tactics used to push retail traders out of the market. The definition I like to use is they force premature traders out of their positions, creating volatility and a stronger market push to a certain direction. So, what is the gain of removing retail traders from the market? Well, the gain is if I'm a billion-dollar hedge fund trader and I have millions of small retail traders in the market, there will be pushback. I mean, obviously, I have the power to ultimately move the market the way I want. But there will be retracements. There will be things that happen that I may not want to happen, right? That could cut into my bottom line as a hedge fund or institutional trader. So the best method is to just get everybody out of the market. Most retail traders are inexperienced and do not really understand price action. They don't understand fundamental analysis in terms of geopolitics and how that affects currencies and indices and commodities around the world. So it's easy to trap them and have them thinking the market is going in one direction, and it's not. Okay, so I've highlighted a really good example on the S&P 500. Okay, so here we have fresh supply that is created. It is broken through. Okay, so retail traders are probably looking to buy right here. All right, if you're an aggressive trader, probably have your pending orders ready. This is why it's not always good, especially when you're first starting out, to trade with pending orders. You want to watch the market play out in real time, and you really want to get a feel for the instruments that you're trading. Okay, so as we see here, I'm going to scroll back a bit so we can see it more in real time. Price breaks through this zone. All right, this is a 30-minute chart. So this is a pretty solid chart to trade from. This isn't like a tick chart or 5-minute. Usually 30 minutes, can indicate some pretty good market direction. All right, so we have a price breakthrough right here. So if you are eager to trade, you're inexperienced, you just want to get in and make some money, you'll probably take this sell, okay? And in most cases, you'll probably take the sell before you get a retest and a continuation pattern. Okay. So you take the sell, you put your stop loss up here, just like we talked about. And look what happens. Price pushes back up. You get stopped out. Okay. And then price continues back in the opposite direction. Okay. Another example here, we have an early sell. It's not quite as aggressive, but I know that a lot of people probably would have entered in right here, especially seeing this pattern. Price hasn't taken off yet. So you're probably thinking, well, price has failed to break this area. Perhaps we're going to see a larger correction in the S&P, and price will continue down at least to this area. Okay. Again, you get in too early. Price continues in the opposite direction, takes out your stop loss, which should be right on top of the zone, and you're out. Okay. So now you have two nice stop hunts here. A lot of people have been eliminated, and you see how price really takes off in the opposite direction. Okay, so how do you combat this? How do you use this to your advantage? That's how I like to teach. It's great to know what a stop hunt is. It's great to know what a fake out is. But how could you trade that and make money? How could you actually think like a hedge fund trader and not be one that is always getting caught in these stop hunts and these fake outs? Okay, so up here at the top, take a screenshot of this, write it down. But number one, place entries where retail traders place their stops. All right. So if you are looking to buy right here, okay, this is also like a double stop hunt because you have the buyers that bought on the breakout, which I'm gonna get this out of here. And that's usually how it works. It takes people out on both sides of the market. So you have your buyers who bought right here. They bought on the breakout. All right. And they put their stops down here beneath the zone. What are you doing? There you go. Beneath the zone. And they also got stopped out. Okay. So let's say you are a buyer in this scenario. All right. This is an uptrending market. All right. Price is making higher highs. We're trading a major index in the US economy. These tend to trend, well, right now they're trending up. They've been trending up for over a year now. So our bias long term is already to buy. Okay. So we're looking for buy positions long term on the S&P. So we're really not looking to short this market too often. So with that in mind, we're looking at this area right here. So if you're a buyer, you're excited right here, right? Because you see this huge momentum candle. You could check the volume down here. Nice volume, pushes up even higher. Price starts to come back. All right. So now you're looking to enter. You'll probably want to enter somewhere around here. Okay. And then boom, price continues down. It takes you out. All right. And now you're out of here. So going back to tips on how to trade to protect yourself here, instead of placing your entry right in the middle of the zone, chances are you're probably why did I do that? Chances are you're probably going to get a break of the zone, like we highlighted here. So instead of placing entries right here, how about place your entry down here? All right. More than likely there's probably going to be a stop hunt. There's probably price is probably going to break through the zone and try and trap sellers and also get the stops for the buyers that entered into early. So instead of placing your entry at the top of the zone or in the middle, place your entry beyond the zone a little bit. All right. So when everybody else is getting whipsawed and getting crushed out of the market, you're just now entering. So imagine if you would have gotten in here where the institutional money was waiting, you would have rode this up. Even when price retraced, when it retraced all the way back for the second stop hunt, you're really not in that much drawdown. So you could have just added to your position here and rode the price all the way back up. All right. So where do most retail traders place their stop losses? If you've ever taken a forex course, a lot of us teach near round numbers, support and resistance zones, swing highs and swing lows. So that would be these areas that I marked off right here. This is a push, another push. So if you're entering in, say, in this area right here on the continuation, then you're going to want to put your stop at the bottom of this last swing low. And then also around big round numbers, so 440 right here, this area. There's no coincidence that what's wrong with my rectangle today. All right. So there's no coincidence that, oh my God, price took off from this area. All right. You see 4440 right even, and it's just gone. Okay. So a lot of people like to place orders around round numbers. Institutions know that. So that's why they tend to try and go for the stops that are in those areas. So if you are prices creeping up to a zone, again, place your entry a little bit outside of the zone, your entry where other people's are placing their stop losses. Place your entries around swing highs and swing lows, round numbers, and around major patterns. So you have like a range pattern here, double top, triple top, double bottom, head and shoulders. All right. It's just about not, we obviously want to follow the trend here. So this is where, it helps to trade 2 or 3 currency pairs, 2 or 3 indices to really just understand their behavior. Because, every pair trades a little bit different. Okay. The biggest thing to do to combat is just wait for price to show its hand. Okay. Wait for price to show its hand. And that really just goes back to our original strategy, the foundation of this whole course is just buyers and sellers. Where are they waiting in the market? And once they tip their hand, that's when you enter the market. All right. It's nice. It's nice to post on Instagram. You know, the sniper entry you got in at the very top, the very bottom, all that good stuff. That's cool. But for every one of those posts, I guarantee there's 5 major losses that is not posted or talked about, and that's because people are trying to get in the market too early. Okay, so wait for price to show its hand. If you would have waited here, I mean, obviously you could have, you could have had your entry in here early, right in this area. But if you would have waited, you would have saw that price continued back to the upside, and you could have waited for this retest. All right, of the zone. So price got rejected, stop hunt. All right, so we know price will eventually continue up, wait for a retest of the zone, and then you get enter in after this rejection candle right here. Okay, it'll bounce around a bit. Come back, you could add to your position because you know that we already saw what just happened not too long ago. Add to your position, and then boom, write it back out. So that's how you trade it, guys. It's about patience and then just thinking outside the box. Don't place your stops where everybody else is placing their stops. Place your entries where everybody else is placing their stops so that when they are exiting the market for getting in too early, you are just now entering the market. And that way you can maximize your profits. All right. Thank you for tuning in. Stay locked in for the next video. Happy trading.